Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, I'm going to give a few of the tips of the trade. I think we're going to be looking at exactly what we're going to attack this week as far as assets go. I've got sort of a laundry list full of pairs that I'm going to go through, look at some key levels. We got some decent key events. I mean, I wouldn't say that this is a great news week by any chance, any stretch of the imagination, but I'm going to go ahead and line out your news week for you and the key events that you need to be watching for, and then also maybe some content that we're going to have coming your way a little bit later on this week as well. We've got to talk about stagflation. For some reason, stagflation is becoming a talking point in the markets right now, so we have to take a look at what exactly stagflation means, what exactly we can expect out of this type of economic environment, and is there actually a chance that we are going to see higher inflation with depressed economic growth? That's typically the kiss of death for developed economies. It's called stagflation, and there's some powerful people talking about this as being a potential eventuality in our current economic cycle. So we're going to go ahead and go over that as just sort of our fundamental of the day, but this is the week ahead, so we're going to be looking at key levels. We've got some trade updates that we got to go over. U.S. oil sort of hovering right around that 65 area. I'm thinking we may have a chance to catch the top of this market for today. I'm watching that relatively closely, though. A lot going on with the rate cut. I mean, rate cut mania is sweeping the United States. It looks like we are going to get that rate cut. We talked a lot about that last Friday with Powell's comments at Jackson Hole. It's an interesting dynamic, and I'm not really necessarily sure who's applying the pressure, but we know what's applying the pressure, and the what is the Trump administration. They're talking about mortgage fraud proceedings, really a criminal referral being launched against Lisa Cook, which is an FOMC member. That's one way. You know, there's a million ways to skin a cat, guys, and right now it is a full court press. It is as much pressure politically as you can put on the Fed to get them to cut interest rates, and we're in an interesting environment right now. I don't necessarily know if cutting rates is the right thing to do, but we know that it's probably going to happen. It's probably going to happen. So Mondays for me, I'm always game planning on Mondays. I don't really get into the trading too much on a Monday, especially a Monday morning. I like to get back, settle in after the weekend break, and game plan for the week ahead. I love Tuesday, Wednesday, Thursdays. That's sort of been, if anybody that's watched any of my streams, you guys understand that that's when I like to target the markets. That middle 72 hours of the trading week, to me, that is where the money's made. Now, you can make money on Mondays. You can make money on Fridays. But a lot of times, it's a heck of a lot easier Tuesday, Wednesday, Thursday than it is on a Monday when maybe we don't have the liquidity we necessarily will have tomorrow. It's slow. I mean, it is. It's just slow. We're going to go over an orb trade here in the US 30 that just set up here on the US 30 15-minute. It's actually live right now. I don't really like it a whole heck of a lot, but it's an interesting trade. And the overall dynamic in the market today, if I had to sum it all up in one word, mixed. I mean, we're up. I mean, commodities are up, stocks are down, cryptos, a lot of the cryptos are sideways. The U.S. dollar is sort of up a little bit by about 0.5%, but the DXY is still severely depressed. So we've got a lot to unpack. But today is a great day just to game plan. And what I mean by that is set the stage. What do we want to do for the week? What's our goals? Where we think we're going to get the best trades? And it's not today. I mean, I'm probably the only live streamer on the internet that's going to sit here and say, you probably don't want to be trading today. You probably don't want to be trading today. But let's go ahead and take a look at who has joined us. Team Marina, good to see you. Team Marina, Hamad Hussein, give me $100. Give this as a gift. No. J&D Adventures, good to see you. Hi, Shane, good to see you. J&D. Tina Shane, good to see you. Tina, welcome. Got some pretty good cross-country work in from what I heard. That's a lot of hiking. I actually got out a little bit this weekend myself. Got a pretty good work in on Saturday when I got out in the woods yesterday, so it was a lot of fun. It's always good to live in an area where you have access to the forest, at least here in the United States. It's definitely a treat to get out and get out of town just for a little while. Gordon Williams, good morning. Good morning, Gordon. Let's see, Stagflation. Yeah, stagflation. That's correct, Tina. We're going to go over that in just a second. Ahmad, please give me $100. No. Sorry. Let's see. Good to see everybody back in the How to Trade trading room. Bobby Bob, good to see you, Bobby. Dave F19 and Steve Francis. Hi, guys. How is everybody doing? Tuku, good to see you. If you guys have any questions at all, be sure to reach out. I'll answer anything you really want. Today's a good day for answering questions. It's also a good day to get lined up and ready to go with a definitely some trade ideas. Okay, Team Marina, according to Reuters, JP Morgan foresees a tariff-induced U.S. stagflationary slowdown in 2025 with a 40% probability of a recession in the second half of the year. I don't know. I called the recession for Q2 and it didn't develop. I'm cautiously optimistic we'll avoid one, but I'm feeling it. I'm watching, I'm seeing some powerful people move. I'm seeing some money people move around. And usually when the money people start selling things and making plays, it means that there's people that are hurting. And usually that trickles down. Recessions trickle down. Remember that. They don't necessarily trickle up. Ahmad's angry. Let me see. One Islam channel, Uganda. Yo, Imram Salam watching from Uganda. Good to see you from Uganda. We got a global community here. All right, guys, let's go ahead and get rid of it. Let's see. T. Marina, how much of that do you agree? Do I agree with a recession? I think it's a very possible thing. I think it's very possible. I think the damage to the U.S. economy coming out of the last 4 years, I mean, let's just be honest, it's been bad. It's been sort of, we call it a pump and dump, where you try to justify cutting interest rates last fall when there was no justification for reducing the prime rate by 0.75 of a point. And yet the inflation kicks off again in 2025, which is what we're doing right now. And you see a real serious situation that didn't have to be that way. They cut rates too soon. There's no question about that. It was done for political reasons. There's no question about that. The only question now is what's going to happen with the U.S. economy. And, it's the old saying, guys, when the U.S. sneezes, the world catches a cold. That's what happens. And right now we're really questioning what the growth is. A lot of us believe we've been in a recession for a long time. I don't really know if there's any getting out of this without a lot of folks taking a major haircut, especially the equities markets. But we saw some real estate numbers come out today that looked okay, but the prices are still astronomically high, especially where I live out here in the West. This is one of the areas that really grew. We're going to go over that as well. All right, guys, enough chin wagging. Let's go ahead and get on with the program here. We got a trade idea that we're going to have to do. Let me see. One Islam. What should think of the DXY this week? I'm going to go ahead and take a look at the DXY as well. We got a lot of pairs to look at. Got a lot of ground to cover. If you have any questions at all, be sure to ask. What do I think about the DXY? I think it's probably going to stay down. It's probably not going to do much of anything. I'll go ahead and go over that chart here in just a second. In any case, remember, this is the Switch Markets community. We've got the team at Switch bringing you a brokerage service, bringing you everything you need to really trade. And then we've got the team at How to Trade, which is education on execution. And what we're doing is we're building a global community there with a bunch of active traders. Doesn't matter your experience level. Feel free to come in, watch the live streams, ask questions. Be sure if you are a Switch Markets customer or you do have access, you go sign up for a demo, give them your email address. You're going to get our newsletter every week. If nothing else, you're going to get my picks of the week. We've been doing pretty well on those picks of the week. We had a great trade in Ethereum not too long ago, and I think that we're going to be locked and loaded for this week as well. We're going to be focusing on currency pairs again and probably just a little bit of gold because gold is sort of ticking higher up to about 3,400. So we're going to definitely be doing that as well. All right, guys, trade idea, trade update. Let's go ahead and get on with it. It's our U.S. oil trade. It is now officially in play. We were looking to sell 84s. I believe we were looking at 64.84s. Right now we're trading 64.96, and this is one of those that we got a real opportunity here to get a decent trade. The high right there was 65.10. We're starting to see the market stagnate right at my 38% Fibonacci retracement level at 64.91. So we're short from 84. I see this trade really coming our way and setting up beautifully. We've got about a 2% move on crude oil today. Really a bullish open to the trading week. Fall seasonality, we're coming up on Labor Day. Labor Day is next Monday. After Labor Day, that's when the trading gets very, very good. And usually we go into a bearish type of a cycle for WTI crude oil. So I love the short side of this market right now. The only thing that really is scaring us a bit, there's two things that are scaring us about the crude oil market. Number one is I believe the NATO, somebody just pledged another $50 billion to the Ukraine for defense. So that suggests that Russia-Ukraine war is going to extend, and maybe that peace isn't as close as we thought it was. And then the other thing is the U.S. interest rate situation. It looks like we're going to start seeing rate cuts. And remember, as that dollar gets weaker, commodities get stronger. And we've been over it a million times, but that really is the truth. You cut interest rates, you devalue the dollar, you put more dollars in the system. It takes more dollars to buy a barrel of oil, or it takes more dollars to buy an ounce of gold. And that's just sort of the way that it is. So that's what we're looking at right now. I don't see any really avoiding the rate cuts at this point. But right now, I do like this to the short. I think that if a person's short from 91-ish, our key level is 84. I'm watching this closely. I'm expecting us to sort of fizzle out here. I'm watching this on the 30-minute chart, sort of my bread and butter when it comes to intraday trading WTI crude. And you can see we're severely in overbought territory. The only thing that would really worry me about taking a short right now is this area right here acting as support. It was a pretty good initial scalp, but now we've broken sort of right around 65. That key level, 65, is dictating policy. That's got buyers, it's got sellers, it's got everything. And right now we're getting compression. Do we get the big sell-off or don't we? It's really hard to say. It's hard to say, but for me, I don't mind being in this position to the short side. I don't think that we're going to tick much higher today. That being said, we still have a lot of room to work. This is one of those trades that we're going to give it a little bit of room to work. Just because we're taking some initial heat doesn't mean that this trade's over yet. It's not over till we say it's over. I think it's in decent position. I'm looking for a late day sell-off in U.S. oil, sort of a reversion back down to maybe 64.50-ish, something like that. But we've got to get rid of that. That resistance zone is now support. We've got to trade beneath that and get some momentum to the bear. Then we'll have an opportunity to win. Let me see. T. Marina, Trump did say he loves a weak dollar. Yeah, most business people do. They like weak dollars. They like a lot of leverage. They like a lot of loan money. That's essentially what business folks do is they secure financing. That's a big part of the whole game is just figuring out, how much money you can get your hands on and what you can buy with it. Take a look at what Trump did with Mar-a-Lago. He bought it relatively inexpensive. The place is now rumored to be worth about $2 billion. And that thing's, he's got, I don't know how many leverage notes out on it just to buy other properties. That's basically the real estate shell game. And it really is. So, yeah, Trump likes weaker dollars. Trump likes leverage. Trump likes liquidity. Trump likes credit. Credit's fun until you have to pay it back sooner or later. Been there, done that. Maybe we'll make a video on Shane in 2013. Whoa, that was a much different situation than I'm in now. But in any case, week 35, this is what we're looking at here. New home sales was the news of the day today. We're going to go ahead and take a look at that in a second. BOJ CPI Tuesday, durable goods. Those are key events. We're going to trade those. We're going to talk about those, break those down for you tomorrow. Wednesday, EIA crude oil stocks. Not much on tap for Wednesday. Probably a big day for crude oil. We'll be looking at that as well. Thursday, GDP and jobless claims. You definitely want to be focused on the GDP figures. They're going to be revised. Remember, we already got the preliminary GDP numbers for Q2. These are going to be the revised in the finals. I would be really surprised if we didn't revise those numbers down a bit, but we don't know yet, and they're not going to revise them all the way into negative territory. I don't even think that's possible. That would mean, 3%? They'd have to revise them like 3%, and that's a bad miss. And then Friday's the core PCE price index. That's probably the big mover this week. Core PCE prices is the number one inflation indicator that the Fed looks at. We are all on the edge of our seats waiting for these inflation numbers because they don't look good. They really don't look good. The inflation is entrenched. Things cost a lot now, and that's just the way it is. It's the way it is. Just get used to it. The only way we can cope with it is to make more money. That's the way it is. All right, news of the day. What do we got to do here? News of the day. New home sales came in at negative 0.6%. Pretty good haircut, but you'll notice that the aggregate number, new home sales for July, did beat expectations. So down from the previous release, but you did beat expectations to the top side. Really wasn't a bad number, even though it's negative. Not a bad number at all. Dallas Manufacturing Index, you don't need to know that. 3-month and 6-month T-bills, you'll notice that those yields did fall a bit, and what that suggested that we're going into sort of a dovish cycle, meaning we're expecting more money on the street relatively soon. Now, as far as our new home sales go, I don't really dwell on these numbers. I really don't, but the proof's in the pudding here. Let's read through it and see exactly what we got from the U.S. Census Bureau right from the horse's mouth. The sale of new single-family homes in the United States eased by 0.6% from the previous month to a seasonally adjusted annualized rate of 652,000 units, trimming the revised 4.1 increase and above market expectations. That's all we need to know. Above market expectations, really not a robust number. 630,000, that's not really that great. Regionally, sales fell sharply in the Midwest and the South, offsetting growth in the West. Growth in the West of 11.7%. Very little supply out west here in the United States as far as new homes go. Makes me want to get back in the business, to be honest with you. You can make a lot of money building right now. You just got to get the financing at the right price. But I've lived that life. There's a lot of money in it when it's good, but when it's not good, it can be really trouble. Let me see. Rasego, Small Yeezy. Good to see you, Small Yeezy. Regionally, sales fell sharply. The West was the big uptick, and the new home sales remained unchanged in the Northeast. That's just a terribly low number. A very, very low supply up there. In the meantime, the number of unsold homes in the market also fell by 0.6 to 499, equivalating 9.2 months of inventory at the latest sales price. So I wouldn't worry about it. The median sales price was $403,800. That's huge. It's as high as it's ever been. 0.8% below the price from last month. I mean, that's what a lofty level. That's the median sales price. Unbelievable. Absolutely unbelievable. So what does all this mean? I want to take you back to the COVID era. Right after COVID, all that 0% money hit the street. Everybody bought houses. Everybody bought houses. Investors bought houses. BlackRock bought houses. Everybody bought houses. And you can see that these numbers that were really very close to 1 million there, seemingly every month after COVID, after all that cheap money hit the market, and now you're just trading sideways. So in my opinion, the inflation problems and the problems that Jay Powell and the Fed have are self-created. This chart right here tells you everything you need to know about the COVID era of economics. When you flood the market with unlimited quantitative easing and as much money as you could possibly print, as fast as you could possibly print it, what do you think is going to happen? That money is going to be put into assets, homes, things like that. Folks that probably couldn't afford $1 million loan went and got $1 million loan and have been able to afford it because it was at 1%, 2%. So it's astronomically created an incredible bubble, and we're still sort of unwinding that bubble. It hasn't really popped, I wouldn't say. Maybe back here we could say that it popped when you went from 970 down to 670. But the COVID era and what the United States Federal Reserve did to the monetary system is a disgrace. And so some would argue you had to do it. You had to do it to avoid a recession or maybe even a depression. In my opinion, the rich got richer, and that's exactly what happened, guys. That money hit the street, and it went into assets. And the money just didn't go to me and you or whoever to buy these things. The money went to the banks. The money went to the hedge funds. And they started sucking up real estate like there's no tomorrow. We're living it right here in the United States. It's a really dismal time to be out there and making moves in the real estate market. It's not good. It's not good for sellers right now, and it's stressful for buyers. It is a bad, bad situation. Will it pop? Eventually. Who knows? 403,000 is your median house. That's unbelievable. That puts home ownership out of range for probably, 70% of the population? Now what? Where are people going to live? It's an interesting thing, guys. It's interesting. In any case, let me see, Duyib. Good evening, sir, from Nigeria. All right, let's go ahead and get on to some price action here. This dollar CAD is sort of an interesting type of a pair. This is the one that I've been looking at relatively religiously. What we had here is we had an opportunity potentially to buy that dip. You can see that this low right here, this little swing low right down around 138.14, somewhere in that zone, and then you got a real nice pop off of that. So that 138.25, we talked about maybe bidding towards the end of the session. You guys remember that? Go back and watch Friday's session. We actually put a market order down, and I said, just go ahead and bid it. You probably could get away with bidding the dollar CAD right at the end of the day. You can see we hit that 13-day EMA down at 138.16. Beautiful trade. 78% was at 138.12, and Friday's low was where? 138.14. We called the bottom that relatively closely. 138.44 has been the bounce. So the bounce has been pretty good, about 32 pips to the top side, but a very, very tight session. So I was asked this question earlier today by a trader, and the question was this: Shane, I'm looking at selling potentially 138.10s, somewhere beneath Friday's low. If we do take that area out, where could price possibly go? And what I would say is this: if we trade beneath and get established beneath Friday's low and look to sell off maybe beneath 138, you're probably going to wipe out this swing low down here at 137.82. So if you were going to make a trade like that, most folks would be looking probably at that order block down in there. Profit target probably be right down around 137.60, something like that. So is the trade really worth it? Is it worth looking for 40 or 50 pips? Potentially, yes. I mean, you could say that. I mean, once 78% is gone on this daily, 138.12, something like that, once that area is gone, in which we trade down in this zone, it's almost a guarantee you're going to take the swing low out, which is down there about 137.82. So if we do extend past that area, then you're going to have a chance to get a little bit of love to the downside and potentially see maybe a bit of a dump. I'm interested. I think this could be fantastic trading, but I got to see that area taken out first to the short. If it doesn't, I wouldn't want to be holding shorts right now just because that range, Friday's range, is so big and it was driven by the Fed and it was sort of an unnatural type of a situation. We could easily trend up and trade up to 138, 138.50 or 138.70 right here. I think the flex point, the inflection point, the break point is 138.14. So if we do sell off beneath that zone, you could definitely see a market crash. No question about it here. In order for that to happen, you're going to have WTI crude oil remain sort of where it's at, right around 65, and the U.S. dollar give back some of today's gains, which I think is almost probable as the week goes on. So dollar CAD, you definitely want to take a peek at that. We've got a breakout trade potentially here. This is the US 30. One of the most popular strategies that we've put out there on our How to Trade Calm YouTube channel has been the 15-minute orb. There's almost no question about it. A lot of folks really love the 9 EMA. A lot of critics on the 9 EMA too, but a lot of folks really love this orb strategy. And we're thinking about all the different ways that we can improve this strategy. One way is we can combine that 920 crossover with the orb. We're going to talk about that potentially a little bit later this week, maybe make a video on that. I think that could be a really strong video and a nice presentation to help you take your orb trading to the next level. But right here, very simple, guys. 15-minute chart, US 30. There you go on the 730 bar and the 745 bar. So the first 30 minutes of the US session, what happened? Nothing. Very tight. I like that in an orb. I like that. What does that mean? It keeps our risk relatively low. So what you have there is sort of a tight, real tight 30 minutes, which is great. Opening 30 minutes, sort of seesaw action. We got the rally, and then we got the sell-off. Well, the market seems to have broken to the bear. We're down about 233, which, a lot of folks would look at 233 points and say, oh, the Dow's off 233. And I'd say, yeah, but it's valued at 45,400. So if that's in fact the case, what's 233 worth? Not much, not even 0.5%. So a decent move. Is it a great move? No, it's not a great move. But right here, our orb strategy, there would be your stop loss right up above, above that orb. And then there would have been your short. There would have been your short right there on that first bar close outside of the opening range breakout. So you'd be net short from about 45,442. Right there, you're trading about 45,401. So you're in the green by about 40 points. The real question is, and really the art form to the orb strategy, is how do we build our profit targets? What should we do? Where should we aim for? And I can almost guarantee you, I get a lot of questions about smart money concepts too. There was an old term, we actually made a video on it called rally-based rally. You guys have heard that phrase before, I'm sure. And what do you think happened right here on this 15-minute chart last Friday? Rally, base, negative candle, rally. Rally, base, rally. What are we doing right here? Rally, base, rally. Okay, so what happened here? We traded right down to that on the U.S. Open, right in this rally base, this base zone. The base sort of is a support zone until it's not. This one broke. So if you were going to set a profit target somewhere, if you were a smart money trader, you'd be looking at that base. You'd be looking at that base to the downside. Is it worth it? Take a look at what you have here. You had a 15-minute chart, okay? 15 minutes. That's the 15 minutes right there when Jay Powell came out and gave his statement at Jackson Hole. That right there is it. So what did we have? We had a big rush of participation. We didn't have any sellers. We had all buyers. Price ran. US 30 broke out, exploded to the top side, put on a light show. What can we say about this area right in here? It's pretty thin. It hasn't been traded. Remember our dynamics. Remember how we think of markets and price discovery. Price runs, boom, runs and rotates. That's exactly what happened. We broke out right there. Now we rotated up here, and now we're selling back off. This area down in here, you almost would bet that it would be debated at some point. Somebody's going to want to trade that action. They're going to want to trade that. So if we fill that into the short, you've got a pretty good chance to maybe get a pretty darn good breakout trade here. A lot of room. There's a lot of room down here to work. There's a great thin chain we can attack. I like it to the short. Not because I necessarily believe these markets are going to come crashing down for any specific reason. This is just natural at this point. So US 30, if you're playing that 15-minute orb breakout range, it's not a bad way to play it. Now, the US 30 here, I do want to look at it on my Fibonacci's and sort of show you what I'm thinking maybe for a little bit later this week. Here's your daily chart. Russia-US summit. Remember that. Ukraine-US-EU summit. That was only a week ago. It feels like a lifetime ago already. We had very high hopes that the war in the Ukraine was over right there. Friday, Saturday. That whole weekend, we were getting ready for peace. Not now. Nice big breakout there based on interest rates, but take a look at what's happening here. You got a potential to get that pullback right down to 45,000. That's a fantastic trade. Spike low there, spike high, maybe a pullback. Look at that beautiful back end of our golden zone. The golden zone strategy, the area between 50% and 62%. 62% right there, 45.20.7. That's a dandy. I'm looking at 45 and a quarters all day long, all day long. So we'll see if we do get that pullback. We're still a couple hundred points off of that. It could definitely happen, though. Market's coming back a little bit. 45.303, you can see right there. There's your key. There's your 38% on the daily. What do we have here? 45.303, something like this. So it would be right here. Still a one-to-one trade. We got a lot of real interesting stuff happening here, folks, in the US 30. So Personally, if I was going to buy this thing, I would wait for a pullback down to 45,000. That's where I would take my shot from. As far as what do I want to do right now, I don't mind the breakout sell. I think it's a pretty good one. Just be aware that Fibonacci was at 45,303 right in here. So that's not a bad trade either. Sort of a little one-to-one. Not bad at all. A lot of potential in this trade to the downside, guys. A lot of potential. Just got to figure out how you want to execute and how much money you want to take out of the market. That's all there is to it. All right, we did have another trade idea that I wanted to point out, and this is a good one because it illustrates the power of trend lines. As you can see right here, here's our MT5 platform. A couple of things about trend lines. The first thing about trend lines is it really is all about the third touch. So a trend line you can draw, basically just connect 2 points. You're looking for a section of higher lows, would be your uptrend, and lower lows would be your downtrend. It really is that simple. This right here was a trend line that we drew in the Euro USD last week, and we talked about it. You really got that really sweet break right there, right on the 19th, and then you sold off significantly, and then you turned around and rallied. But look where you rallied to. That's not an accident. That is not an accident. You rallied right here up to your trend line. Boom, we connected this area, sort of compression right there. Rallied huge on the rate cut news. Bam, hit that trend line, came back down. Believe it or not, you're still short. Now, I was talking about you probably had to stop yourself out right there, right above that swing high. That's one way to trade trend lines. The other way is just to let the trend line do all the work. A lot of folks really believe in, hey, listen, the 45-degree line's everything. You don't get out of that until you close above the trend line. Interesting stuff, guys. Believe it or not, that downtrend still valid. Now, the price action's not great. The price action is not great. You're definitely flatlining, and we're right back to sort of where our original entry was, but you're beneath that trend line. So we're looking for a little bit of bearish price action here in the Euro USD, but in order to get that over time, we're going to have to see a shift in sentiment towards the US dollar. That trend line, though, not bad at all. Not bad at all. Let me see. Solomon, good evening. I'm Solomon from Nigeria. Good to see you, Solomon. Welcome. Welcome one, welcome all. I'm out here in Dillon, Montana in the United States, northwestern part of the United States, but southwestern part of the big state, the great state of Montana. So I understand that we are a global community. We got folks from the UK. We got folks from really every walk of life in this room. And so you ask questions, you learn at your own pace, and see what you can do. That's all there is to it, guys, really. All right, we've got a few things that we want to look at here. I had a question on the DXY. Remember, on your market watch here, if you're going to go ahead and use your MT5 platform, you just go ahead and plug DXY in or whatever symbol you want, and you just add that to your list, and you see it populates the list right there in your market watch, and then you just drag and drop, and then you're ready to go. Switch Markets has thousands and thousands of contracts you can trade, products you can trade. So really, you shouldn't be hurting to find a market to trade. So right here, we're off big. Last week, we're off big in the DXY. Nice big move on Friday. Why? Rate cuts, Jay Powell. We covered that extensively. And now we're sort of on the mend. We're bouncing back a little bit. As far as what I would be looking to do here with the dollar index, I would back off to a weekly chart. Weekly chart really shows you where you're at with regards to the long-term price action. So if you wanted even a more clear-cut case, right here, this is your monthly. You've sort of filled in this little gap that you had really going back to 2023, somewhere in there. Yeah, 2023. Really, we had a little bit of a breakout to the top side. We're filling that gap in now. But this right here has just been a losing streak for the dollar all year long. And it's important for us to be able to see these things, these losing streaks, and capitalize on them. We don't see anything necessarily that's going to shake the U.S. dollar. We don't see anything. It's one of those things. It's one of those things that I would be irresponsible if I sat here and tried to pick a bottom in the USD. I don't think you can. We're going into rate cut mania, and when we get into this rate cut business, it's going to be very, very interesting to see how the economy responds and what happens. And a lot of that comes back to stagflation. We're going to talk about that in just a second. So that's a good look at the DXY right there. Your key levels 101.87. I would love to sell up there. I would sell that all day long and twice on Sundays. I have no intentions of betting on the U.S. dollar anytime soon. The only way that we would do that is if Jay Powell or somebody comes out and says, hey, listen, we're not cutting interest rates because we're scared. We're scared of inflation. We'll know more about PCE on Friday. That'll give us a bit of a look. And you see our orb right here. Our orb trade's really starting to open up to the downside. I like this one. This one's growing on me a lot. Why? This chain right here is everything. When you guys read price action long enough, and you've been doing this for 15 years, you'll see bars like that and say there's not a whole lot of business got conducted in there. Let's see what the sellers say this time around. I'm interested. I think we got an opportunity there potentially to get a real nice short trade, and then potentially to get a beautiful long trade from 45,000. Would love it. Okay, we had some other questions here. Dollar yen. Let's definitely look at the dollar yen. This was one of the big movers and shakers last week. Hard though. Really hard. Friday was crazy. Friday was crazy for all the majors. Why? Because the interest rate expectations shifted dramatically. Now, we've absolutely flatlined. So if I'm trading the dollar yen, there's a couple of things I'm looking at. Number one is my Bollinger Bands are flat. They're absolutely flat. They're parallel. What does that mean? It means the market conditions are slow. And when they're slow, that means they're not trending. So we're just going bang, bang, bang from one band to the other band to the other band. This would be a situation where you could see if you sold that upper Bollinger Band, you did very well. You can get away with strategies like this in this type of market condition. And when I say parallel, what does this mean? Top side, bottom side. It means the market's flat. When the market is flat, it's just trading sideways. It doesn't have a direction. So this dollar yen is difficult to nail because it just isn't moving. So for us, what could we do? We just got to change our strategy. We got to change the way we think. Instead of trying to play a breakout or waiting for this thing really to move, take a look at your upper and lower Bollinger Band. My lower Bollinger Band, I would consider robust downside support. You probably are going to be just fine selling the upper and buying the lower here. So this is definitely a strategy that I've looked at a lot. I'd have to double check our trading schedule for this week, but I believe we're going to be talking Bollinger Bands relatively soon. And this would be one of those trades where I would say, yeah, you got a pretty good chance of making the play. Sometimes with Bollinger Bands, wrong button. Sometimes on Bollinger Bands, I go to a line chart. And my line chart shows me exactly how prices behaved with regards to a period of time inside of those Bollinger Bands or outside of them. That's called a coastline trade. I'm not going to open that can of worms today, but we'll talk about it at some point. There really is a lot to those trades, and we'll dig into maybe some coastline trading. But as far as the dollar yen goes, I mean, for me, it's easy. You're either going to play rotation or you're going to play like a reversion to the mean type of a strategy, or you're going to pull up a monthly chart and get a range you can sink your teeth into. Spike low there, spike high. What do you got? We had a beautiful failure right there at 38%, and now we've bounced. It's really a good trade, but you've got to wait. You've got to be patient, and I know that patience can be difficult. I know that. Let me see. Small Yeezy. The market is in consolidation at the moment, but on the lower time frame, it's ranging. Yeah, I agree. I agree with what you're saying. But when I see a daily chart, the way that it's set up, I mean, there's your 38% on my monthly. That's my macro level. Absolutely kick some tail. Beautiful trade, right? Well, when we step back to our daily here, it's flat. That's a daily chart. Those Bollinger Bands are parallel. They are flat. So we could go to whatever time frame you want. We go to a 30-minute chart. We can do all these different things and try to be excited about what's happening, but I'm not. This is a very small range in my view. As far as your daily range goes, you haven't broken out. You haven't really done much of anything. If you wanted to buy right now, I could say, 147.50, you're buying. It's a high-risk trade, though. It's not an easy one by any stretch of the imagination. All right, guys, let's talk a little bit of stagflation, and then we'll look at gold and call it a day. Stagflation is one of those topics that economists love to talk about because it scares the bejesus out of everybody. Stagflation truly is the kiss of death for developed economies. And I say developed economies because developing nations, developing economies have so many other market drivers that really impact the broader health or the broader growth rates of the country itself, of not the global economy, but the domestic economy. So stagflation would be something that, it's got a history of producing really ugly things. Weimar Republic, Germany, back in the day, Argentina got absolutely destroyed at one point by stagflation, and it's one of those scenarios that it destroys wealth, it destroys people, it destroys savers, it destroys investors, and it really is something that keeps economists up at night, and it should. Because when we go into a stagflation type of a cycle, we had that in the late 70s. Interest rates had to go to 20% just to try to control the prices. And the flat refusal of the powers that be right now to raise interest rates and hold them there until we get an efficient economy again should scare everybody, and it should scare everybody on the news. It should scare everybody on CNBC. Investors are savvy. They're smart. They know there's a real chance of this happening. We're starting to see people talk about it now. Typically, this is a bad word. You don't say this in investing realms. So what is stagflation? Well, here's Wikipedia. I don't like Wikipedia, but we'll go ahead and read it anyways. This looks like a decent definition. Stagflation is a combination of high inflation, stagnant economic growth, and elevated unemployment. The term stagflation, I don't even know what that word is, but stagflation and inflation was popularized, probably coined by British politician Ian MacLeod. Okay, I don't care who made it up. The big thing is this, to remember about stagflation. Stagflation occurs when inflation's high, economic growth is low, and unemployment is growing. Given that scenario, think about what that does to your pocketbook. You have to pay more for your necessities. Odds are you don't have a job or you're underemployed, meaning you don't have a job that you're qualified for, and that economic growth contracts, prices are high. It's a nightmare scenario. It's like a depression type of a scenario. So when people talk stagflation, it's a very, very serious thing. Now, why would I even bring this up? Well, you can see right here, here's some of the impacts. The Fed cuts interest rates, allowing for longer duration bonds to rally. Okay, fine. Equity markets sell off. All right. The Fed is unable to cut rates, causing bonds to trade down along with everything else. So what it is it's a vicious cycle, and it all really is predicated upon inflation running wild. That's what it is. The prices get so high, and what we saw last month on the PPI, remember that producer price index? That is when everybody said, okay, the wholesalers are really getting hit with this inflation. Could this be the beginning of an economic slowdown sparked by tariffs, say, or sparked by external stimulus that's boosting prices artificially? I don't know. I'm not ready to say that tariffs are the reason to blame. I'm really not, because the jury's still out. Nobody knows that yet. We will be finding out over the next few months. By the end of the year, we will know that. So when we take a look at what's happening here in the economy, there's reason for concern. Paul Krugman, this guy's everywhere. He wrote about what stagflation is, why this former Fed president is worried about stagflation. You're starting to see this really come up in the last week. Both sides of the Fed's mandate as risk as stagflation fears loom. What U.S. stagflation could mean to world markets. The economy is starting to pay for Trump's chaos. New York Times, stagflation blamed on tariffs. How the Fed should deal with U.S. stagflation risk. Guys, this is all within the last week. That was 3 weeks ago there. But really, you're talking about just the last week. We've got all these stories, and I get it. I understand the media. I get it. They get a buzzword, and they pile on, and they say, okay, this is what we're going to talk about today. Well, that's all fine and dandy. But what do we have? We have inflation. We have consumer prices that are way too high. We have wholesalers that are way too high. We also have some bad labor numbers. We've got some really tough, we're coming off a tough NFP report. It doesn't look like that expansion in the private sector is where we think it should be. This feels iffy. So if you do get a situation that, stagflation comes into play, what do you think would probably be an amazing bet? Gold. Gold will be an amazing bet. The reason why is the inflation will be high. So you have gold as that inflationary hedge, something where you're trying to keep some of your wealth, and all that's fine and dandy. But what else are you going to have? You're going to have the uncertainty of an economic slowdown, potentially recession, and you're also going to have some real pain being felt, not just in the private sector, but in the lending sector. If anybody was around in 2007 and 2008 when Lehman Brothers crashed, that's what we're talking about. We're talking about a potential liquidity crunch, even though the Fed's cutting. Why do you think the Fed would be cutting interest rates and putting more money into the system? Because they're worried about liquidity. They want to make sure that the banks have enough money to operate at a reasonable level so they can spark consumption. Tomorrow, we've got consumer confidence. We're not looking for a very good number here. It's going to be a big day. It's going to be a big week. All these peripherals are starting to come together. Something like gold has a potential to perform very, very well, even from current levels. Now, what do you have here? 920. This is the one that we covered on Friday, 920 EMA crossover. You can see we crossed over right there, 4-hour chart. There was the bid right there, and you're pretty much right around break even. I was basically advising, I can't advise, but I was basically saying, hey, listen, you might want to wait for a pullback. That was a pretty good pullback there, 24th of August. Nice pullback, and then bang, you're off and rolling. And I think that you got an interesting type of a situation there in the spot gold market. With this much angst over stagflation and tariff concerns and all the different things that go into it, I'm hard-pressed to find a scenario where we don't go up and take a look at our 3,500 key level. I really think that if you're holding longs, investment longs, or even swing trade longs, 3,500 is probably where it's at. That looks to me like what's happening here. So as long as we think we're getting rate cuts, and we do after Friday, we believe they're coming. Stagflation worries, inflation worries. I mean, gold as a hedge is probably going to be very, very attractive to most traders and investors in the market. So I've shown you guys this chart a million times. I'm almost embarrassed to pull it up, but this really is my gold analysis right now. You pulled up your monthly chart, something like this. That's a pennant. That's a bullish pennant. I've really drawn it a million times, but we really have to understand that this is huge. This really could dictate gold pricing for the next several months. So something like this, we go here. Bullish pennant. We're waiting for a breakout. Key levels I would be watching right now. Your high is going to be 34.38, something like that. That's last month's high. Be ready. We've traded inside of last month for almost the entirety of August. Be ready for a break. Be ready for a break maybe later this week. We just got to wait and see what those PCE figures are. But this right here is huge. Take a look at what's happened. We've traded inside. We've traded inside of April's range for 3 months. It's rough out there. It's rough in the gold market, guys. It's very difficult to try to pick these things intraday, day after day after day in a market that just is not moving. When the market doesn't move, we get eaten up. We get chopped up. You got to be sure that you're smart with what you do with gold. Don't just buy it to hold it unless you have a lot of money and you can just say, okay, I'm going to wait for that big run. Right now, I'm sort of in wait and see mode. I want to see if we actually break. Take a look at this formation really take a look at this monthly formation. It's a bullish pennant. There's no question. I haven't seen one this clear in the gold market in forever. Well, you got a nice really compression. What is that? That's a doji. You got inverted hammer. That's theoretically a reversal signal. If we don't trade beneath last month's low, or if we start to break to the top side, this market's not just going a little bit higher. It's going a lot higher. It's going to 4,000. So be very careful when you're trading gold right now. I don't want anybody to get chopped up. And by chopped up, I mean daily. Take a look at the daily. It's really difficult in there. It's tough. So if you want to trade and you want to be aggressive, you do so, but do it with good stop losses. Don't give it all away. Right there, not bad. Our 920 is a pretty good trade. It's not a bad trade at all. All right, guys, I'm going to go ahead and sign off. I've gone on long enough. I sure appreciate everybody joining me on a Monday. We went over the key events for this week. Probably the headliner is going to be core PCE unless we get another big news item out of the Fed. As far as the pairs to watch, we're going to have our picks of the week out a little bit later today. And I think that we're going to have some really good picks. Right now, I'm looking at the Euro CAD, the Euro USD. The Euro USD definitely with that reversal on the trend line is interesting to me. And then also the Euro CAD. We're going to look at the Euro CAD probably. And then the CAD Yen. The CAD Yen's a pretty good one. It's on the move. Australian dollar, US dollar, definitely that one. And then probably gold more than likely. Gold isn't as attractive as it was a while ago, though. They're very, very tight in there. So we've got to be careful with what we do. But we can do it, guys. We can figure this out. Think of every week as you just got to figure it out. You got to get in there and figure it out. We already understand when the key events are coming. We outline those. We're going to be with you on these live streams pretty much every day this week. Tomorrow we're going to be trading the BOJ, CPI, U.S. durable goods, and a hot news cycle. So we've got a lot of news out. We got CB consumer confidence tomorrow. That's big. We're going to talk about some of these fundamentals. We're also going to pull up some fresh recession odds and see what everybody thinks is going to happen here as we roll deeper into Q3. And then also we're going to have really a pretty good commodity trading week. I'm watching crude oil closely right now. An interesting dynamic. We're sort of fizzling right around 65. That's a beautiful thing if you're holding on to those shorts that we had out in the trade idea. Okay, remember, Bollinger Band trading strategies. We're going to go ahead and do that for Switch Markets clients and how to trade customers. We're going to be doing that on Wednesday, so we're going to go ahead, locked and loaded. I'm going to give you a full workshop. Wednesday's a good day to do it. We don't have much news out. Tomorrow, I want to be in the pocket, though, pointing out trades. And then Thursday, you're looking at Trump, Powell, and U.S. GDP. It's time to trade. We're going to go over those GDP numbers, interest rate expectations, and everything. And then Friday strategy session, we're going to trade some moving averages. We're going to talk a little bit about what a moving average is. We're going to talk about maybe my favorite moving average and everything you need to do to be successful trading moving averages. All right, guys. That's about it. You guys have a fantastic session. Absolutely, Tina. You're welcome. Thanks for joining us. Eli, just a piece of the pie is all I need. J&D Adventures. Thanks, Shane. Great. Absolutely. Steve Francis. Thanks. Great advice as usual. I don't know. Like I said, I don't give advice. I'm not a financial advisor. I don't have the big fancy suits on. I don't wear the $10,000 suits and the big watches. I got a Fitbit on to monitor my heart rate. I don't want to get too worked up, but yeah, guys, we're in for a good trading week. I'll just cut to the chase. I'm not as excited about this trading week as I was last week. Typically, we see a lull right before the Labor Day weekend, which is next Monday. So we've got interesting sort of action there. But after Labor Day, mid-September, things will be going full force. Absolutely. Absolutely, you're 100% welcome. All right, guys, I'm going to go ahead and sign off for a while. You have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.